piece of that right now is what we're seeing in the action with Apple, which is out with a new revenue warning. The tech giant blaming lower global iPhone supply issues and slumping Chinese demand due to the coronavirus outbreak. As you can see there, the stock currently off about 2.3%. And joining us now for more insight on that is Gerber Kawasaki CEO Ross Gerber, who joins us remotely. And Ross, I mean, when we look at this, about a fifth of Apple's global revenue comes from Greater China. That includes Hong Kong and Taiwan. But the bigger issue might not be just demand, although that is an issue, as they're saying here, but also the supply issues when it comes to actually getting products out there all across the globe. So what are you making of the move we're seeing and the warning that we're hearing from Apple?
Well, we're not surprised, and we've been talking about this on Twitter for weeks, that most of the companies have put their head in the sand, just believe what the Chinese government told them. And the fact of the matter is this disease is causing a great problem for not just Apple, but so many companies, whether it's supply chain issues, which are a much bigger deal than just the demand issue in China, because it affects demand across or supply across the world. So Apple's just the start of it. We're going to see so many companies coming out over the next couple months talking about the enormous cost this virus is going to have on the global economy. And we expect a dramatic slowing of the Chinese economy over the next couple months and maybe for the rest of the year.
Yeah, surprisingly, I mean, Apple has a lot of good things going for it, too, though, so that might be why we're only seeing about a 2% move lower here on this. Of course, they already gave that widened window, blaming the coronavirus for why they gave such a wide guidance for the second quarter. The $63 billion to $67 billion was their range. They didn't update with specifics in terms of the numbers where that might go from here, but a few analysts were weighing in on that. I'm curious to get your take on what we might see when some people are saying that the new estimate might be likely lower to about $61 billion as consensus here. So what do you think the impact might be?
I mean, I have an even lower number personally because I think they are, not able to resupply stores across the world. You have increased costs. You have lower demand in China. I mean, it's so many issues for a company like Apple. We're just not sure. And that's my thing is, you got nobody in China shopping at all. We're really, I think, going to see a massive negative GDP number, and it's a big market for Apple. And as I said before, this is just the beginning for so many companies, large and small, whether you're in tourism or travel or whatever, just supplying products or chips. The factories are not up; they're not at full capacity. This will not happen this week. It will not happen next week. So this is a long-term issue that everybody wants to make a short-term issue. But I think that there's a dramatic change in the global economy that we're seeing right now. And investors need to take a really good look at that with U.S. markets at all-time high and the U.S. economy doing great. But if I can't buy an iPhone because they're out, I can't buy an iPhone because they're out.
So, Ross, it's Kristen here. Off the back of that, because a lot of analysts and even Apple themselves seem to be pretty optimistic that this is going to be, as you were saying, a short-term problem. So then do you actually think this is going to drag out and an impact Q2, Q3, and Q4?
Yeah, most of the analysts are consistently wrong. That's one thing I can say about analysts, and they need some sort of number to base their future numbers off, and we don't actually have numbers yet, so they haven't made adjustments to their estimates. But anybody who thinks this virus is just going to go away next week and they'll cure it, and China will just be this V-shaped recovery next quarter, everything will be fine, I think is missing a much bigger story, which this virus is tough to contain. We have very draconian measures going on in China that are not sustainable. The U.S. has banned so much travel, into the U.S. and California. That's a huge impact. So, yeah, I think the entire year, whatever numbers you have for earnings or GDP growth or global GDP are wrong. It's going to be lower. We've taken steps in our portfolios to protect our clients. I'm a bull, and I was going into this year super bullish before this coronavirus with trade resolution and the U.S. economy as strong as it is. So that's the upside, is we'll see plenty of liquidity, and we'll see the U.S. economy continue to be strong for now. But boy, this is a kind of a scary time as we reassess how this virus will impact us.
Absolutely. When we look at the timeline, too, there are a lot of question marks there. Nomura out with a note. As you said, a lot of people are expecting Foxconn, if you believe their numbers, that 50% of mainland China production might resume by the end of February, 80% in mid-March. Nomura out saying that they might not get back to full production until mid-April, so much later in their estimate.